Right, in the last video we discussed that to mark an entry as having money received, you just click this here and it puts a yes next to it. So if I actually received the money for this entry on this invoice when he paid it from that invoice, I click this and it marks it as yes. I think that's pretty well self-explanatory. Alright, so as of now, this particular area here is adjusting the money owed on account only. It's not updating to the income as yet. So if I exit out of here, we will see that he currently owes us $30, and that was for the other amount that was still on account owing from June that I entered earlier. Right, now moving right along, naturally something that wasn't pointed out earlier is you can turn on and off the groups. So if you do want to use project groups as well with accounts receivables, you can actually include the project group in here as well. But that's a selection you've got to turn on and off. So I'm just going to use that off, leave that off. This side here, all this here is to do with updating the actual account. If I click over here now, I want to record that amount received, so we update it to the invoice. So now I'm going to include the date we received the income, the date that's on the invoice, or sorry, the date that's on the check, whatever it is that we received. So we can say received July payment, invoice, whatever it was, whatever the invoice number was, and we record the actual amount. Now the moment I hit enter on this screen's going to pop up. It's going to ask us, do you want to send this to income, directly to income, or are we recording this against an invoice? So if you created an invoice for this account and you issued the client with an invoice, naturally you're going to record it against the invoice first. However, if you didn't issue invoices to clients on accounts receivable, if it was just a total amount here and you just want to record it direct to income, then you're going to just click straight to income because you didn't issue an invoice, so naturally you've got no invoice to go against. Most of the time I would assume that if you've got an accounts receivable, you're issuing invoices anyway. So yes, we issued an invoice to the client, so I need to record it against the invoice first. So I'm going to click record against invoice. Now we need to find that invoice, so I'm just going to filter all these invoices for that customer, and there's the invoice. So I'm going to click payment received, yes, and of course we want to add it to income, yes, and in this instance we received all of the money, so all I virtually need to do is select the method of payment, and it's already given us today's date. Okay, if that wasn't the date that you received the payment, then obviously you're going to need to change that. So maybe we received it yesterday, so I'm going to put down yesterday's date. In this case, because he's paid all of it, I can just click done. The moment I click done, do I want to print a receipt? No, I don't need a receipt. So it's updated as per normal. It's updated the income, and we don't need to discuss that because that's as per the invoice videos. Okay, so the moment I see how I clicked exit, then it returned us to the accounts receivable. Because we came from the accounts receivable, we have to come back to the accounts receivable. So now that's been done, and if you have a look over here, it says send to income. Yes, we know that we've already sent that to the income. The account's been updated. It says the balance of the account is still $30, which was still that amount here. This particular line here is really just giving us the totals of all of these entries above. I don't think that that's very relevant at all down the road. I mean, you don't need to know all that, I guess, but it is there. This is more relevant, the accounts balance, which is the exact information that's over here anyway. Right, so that's basically how to record money coming in and out on the accounts receivable. What is something else that we had up on the screen? I'm going to come along here and I'm going to enter in another month's worth of payments. Actual fact, I'm going to enter in a couple of payments from previous months because I want to show you something. I'm just going to pause this video and we'll come back. Well, I've come back. I've just entered in a couple of dummy entries here. I had to work out what I was trying to do, and I'm just going to exit that screen quickly for a second and come back. Now let's put it in date order again. So naturally, if we have a look down here, we see that we haven't received any payments for these particular months, right? For these entries here, I've received this month's payment. For some reason, maybe I've forgotten an invoice, whatever. I'm just showing you this as an example, okay? So what we see here is we see outstanding amounts from previous months. Now, this is where, if we go back to the main screen, we see a report up here that says aged report. This is brilliant because now we can select age report, and I'll show you something. These settings on the age report are as per these setup report. This can tell you if a customer's entries are greater than 30 days, 60 days, or 90 days. And as we have a look at Southside Timbers again, you'll see that I made some entries back in April, May, and June. Okay, so these entries are well over 30 days. So we should see a difference on this report. If I click the age report, I'm going to use today's date as our starting point. We'll see here we have today's date. As of today's date, there is $155 outstanding on Southside's account. Between 1 and 30 days, there is no money outstanding because he's paid up in full. Remember, he paid for the previous month. But between 31 and 60 days, there is $60 outstanding. Between 61 days and 90 days, he has $65. And after 90 days, he has $30. So he has money owing from over 3 months ago. So this tells you if a client's behind, and this is great because this sets up a trend. It lets you see if a particular client is consistently behind in payments. And what we see over here, on the end here, we have a separate report. It's similar to the age report. If I click this on here, it shows us an age report for this client only. See here? It doesn't bring up all the other clients, it brings up this client. And what it shows us is quite remarkable. It's listing all the overdue amounts. The individual amounts that are shown here are listed here. So if a client's behind in payments, you can print off that individual age report and send it to the client. And they can see, hey, you know, you're over by 90 days, and the one that's over by 90 days happens to be this one here. So if I have a look at that, it's listed the most oldest first. So that's cool. That's probably relevant. So it's listed here. You're over. I mowed a lawn on this date and you never paid me. That's 90 days over on account. So obviously these dates depend upon what you set up here. If you set up the age report, you might say, no, I want it set up at 60, 90. Whoops. 90 and 120 because you are happy, you give clients 60 days on account. Okay, so if you set up as that, then naturally this is going to change. It's going to reflect that. See that? So this information changed now. Between 1 and 60 days, you now have money outstanding. So you see it adjusted according to your settings. I think that explains that. The only other thing I want to talk about is here. If I click the age report to preview the age report, which is the same as this here, okay, the same as the print, this comes up, right? So what it says is, do we use it from today's date or do we select another date? It might be that you want to see how a client is going month to month. So we might be in June, but you want to see where was the client's account standing at in February. So you enter in the end of February and you press select. So it lets you see, was the client up to date in February? You go March, and you can print out 6 individual reports, and then you can see if there's a trend. You can actually see these reports and you can say, okay, in February, March, each month they're consistently behind by 90 days. So you can adjust mentally and say, okay, this particular client is, for some reason, only pays me every 90 days and he consistently holds money back. So you can adjust for that in your cash flow. It gives you an idea, do I want to continue with this client? If he's a great payer but he just strings me on as long as he can before he pays, then you're just going to adjust your cash flow accordingly if you want to keep this client. But this allows you to obtain a report, because obviously sometimes it's not relevant to obtain an accounts receivable as of today's date, because in this case he's already paid up to, he's paid, hasn't he? He's paid up to scratch. This particular client here paid for this month. So you might want to see as at the end of the previous month, the 3rd of June, to you might be more relevant. You want to see where was he standing at the 3rd of June, and there we are here, and that's where he is. For whatever reason, anyway, that explains what that's for.